We've looked at two different types of businesses. A service business provides a service for their customers and they don't have any inventory. A retail business buys and sells inventory to their customers and they will have one inventory account on their balance sheet. Now we're going to look at a manufacturing business. A manufacturing business makes a product. They need to buy the materials, they need to make that product in a factory, and then they need to sell it to their customers. A manufacturing business has two types of costs. Manufacturing costs, these are called the product costs, and these are all the costs incurred in the factory where you make the product. Every cost that happens in the factory goes into this group. But running a manufacturing business, you will have lots of other business operating costs. The non-manufacturing costs, these are called the period costs. So these are the other costs to run the business. So to summarize, for a manufacturing business, the costs of this business are split into two groups, the product cost group and the period cost group. Let's talk about the product cost in more detail. So remember, we just said the product cost are all the costs that happen in the factory where you're making the product. Now, these product costs go into one of three categories. The first category is the direct materials. These are the materials that you're using to make the product. The second is the direct labour. This is the wages of the factory workers. Now, if a cost is not direct materials, if it's not the direct labour, then every other factory cost goes into factory overhead. Factory overhead includes all other factory costs, things like the factory rent, insurance, electricity, and so on. Then we just explained that the product cost has three categories: the direct materials, the direct labour, and the overhead. One thing I notice in assessments is that students often get really confused between what belongs into manufacturing overhead and what belongs into period costs. So here I have lots of examples of manufacturing overhead costs and period costs. Please take a minute to read these lists. One thing I like to do to remember the difference is when you think of overhead, you've got to think of a cost that happens in the factory. If it's a cost that would happen in the factory where you're making the product, this will be manufacturing overhead. However, a period cost are the other business costs, the costs of running the business, and I think of these as costs that would happen in the office. Things like research and design costs, customer service, office costs, administration costs, and so on. Let's look at the cost flow for a manufacturing business. The business makes their product in the factory. All the factory costs are put into one of these three groups. Is it a direct material? Is it something you're using to make the product? Is it a direct labour cost? Is it the wages of the person making the product in the factory? Or is it all your other overhead costs? Add up all of these together. This is called your product cost. All of these costs are recorded in the work in process inventory account for the factory. When these products are finished, the costs go into the finished goods inventory account. Now you might notice both of these are called inventory. These are both asset accounts. When the product is then sold to customers, the cost of making that product goes into the cost of goods sold account. And we know that this kind of account is an expense. What's the difference between work in process and finished goods? They are both inventory accounts. Work in process is where you record the costs while you're making the product in the factory. Finished goods records the cost of the finished products in your factory. Here you can see the accounts for a manufacturing business. Raw materials, work in process, and finished goods. These are all the inventory accounts for a manufacturing business. So you can see there are 3 different inventory accounts. Raw materials records the materials you've purchased, and then when they're used, this will decrease the inventory. Work in process is where you record all the costs in your factory, the direct materials, the direct labour, and the overhead. When the product is finished, that cost moves into the finished goods account. Finished goods shows the cost of what you finished making, and then when that product is sold, that will decrease the finished goods account. Cost of goods sold is an expense account. And this will show the cost of the products you have sold to your customers.